bad do you think market crash is going to be?
This is the biggest crash we'll ever see in our lifetimes. It's called the everything bubble. Everything's going to come down. So the worst it get is civil war. I think the best we can express is probably a depression. As I said last night, what we do, we print money to solve our problems. And all that does is increase debt and creates more freeloaders, social welfare. At the same time, our debt escalates. Our debt to GDP right now is 120%. At 90% debt to GDP, we're bankrupt. That means for every dollar we spend, we go deeper in debt right now. So for most people, that's bad news. But as I was saying last night, crashes, everything goes on sale.
This is not a drill, folks, and this is not something you should take lightly or glaze over, because the information I'm about to cover in this video may very well set you up for life and also help you to avoid financial ruin. Robert Kiyosaki, author of Rich Dad, Poor Dad, and real estate investor worth hundreds of millions of dollars, is arguably one of the most influential voices in markets, and he just shared a major warning that crypto investors should be paying attention to. And not only will this warning affect Bitcoin and Ethereum, but it will also affect XRP and anyone who holds XRP. So in this video, we'll be sharing Robert Kiyosaki's startling prediction and what that means for crypto markets. We'll also be covering some macroeconomic indicators that are shockingly accurate at predicting recessions and how it's now flashing a signal, but whether or not you should heed this signal right now or months from now, because that can make all the difference in terms of the size of your portfolio. So let's dive into the content of the video, and by the end, you'll have a good idea about whether or not Robert Kiyosaki's prediction will come true in 2024 and what you can do right now to take advantage of the current economic environment over the upcoming months. Hello and welcome back to the channel. My name is Paul, and we're going to cover what Robert Kiyosaki said. Then we're going to kind of try to debunk whether or not this is going to actually happen sooner rather than later, because I think a lot of people that are very, very smart, including some really great economists, have consistently been calling for a recession by 2023. That obviously hasn't happened. All we've seen is a current bull market from the start of 2023 into 2024. Everything has been rallying, and virtually every single major market that is quote unquote risk on is up. So that said, Robert Kiyosaki is basically explaining that since the 2008 great financial crisis, the Fed and the Treasury have been printing money. They've tossed everyone under the bus, and virtually at one point in time during an everything bubble, all markets crashed, to which he actually shares the everything bubble is going to turn into an everything crash. And that would include, think about it for a second, typically people want to be in risk off asset classes or hard money, right, during a crash. In other words, they start to invest in gold. Well, in the case of an everything crash, gold, silver, and Bitcoin will crash as well. And so in a post from Robert Kiyosaki on April 6th, he's basically stating that the everything bubble, stocks, bonds, real estate are set to crash. US debt increases to $1 trillion every single 90 days. The US is bankrupt. Save yourself. Please buy more real gold, silver, and Bitcoin. Yet at the same time, he's basically saying these things are going to crash. And in this article, he's basically stating that Bitcoin may drop to even $5,000 amid a market collapse. So imagine right now we're sitting at about $67,000 to $69,000. Imagine if Bitcoin actually dumped to $5,000. I don't think people would think it's going to be around anymore. I would truly think people like Bitcoin was a bubble, it was a scam, it's going away. And I would argue the entire crypto market would absolutely collapse, upwards of 90 to 95%. And that can be very scary for most investors to hear. Nobody wants to lose 90+% of their portfolio value investing in something that they believe is the future. Now, one of the reasons that he's actually seeing or calling for an everything bubble here in the near future or on the horizon is the fact that he's pointing out to gold's all-time high prices and cautioned, unfortunately, higher gold prices generally mean investors are becoming more pessimistic. Many investors shift out of stocks and start buying defensive assets, so higher gold prices are not necessarily a good sign. And when you look at a tweet from Anthony Pompliano, the same remains true. He's basically telling you the market is giving you answers. It's giving you signals. Are you listening? Gold is consistently hitting new all-time highs. And it's actually quite impressive what gold has done very recently. You can see here in August of 2011, gold peaked off at about $1,900. And this was obviously off the back of consistent uncertainty after the Great Recession of 2008. And that recession lasted about 2-3 years. So gold continued to climb. People weren't really too confident in the markets, which put in this peak. Then from that point forward, markets really started to rally and do well over basically the next decade. But as you can see here, we painted a huge cup. Then we did a handle for another couple years from 2020 all the way through 2023 December. And since that point in time, gold has been rallying and recently topped a new all-time high. Now that's actually quite impressive because the market cap of gold is now sitting at $18.36 trillion. And Bitcoin is currently sitting at a market cap of only $1.33 trillion. Yet it's basically like the digital gold. And what's so beautiful about Bitcoin versus gold is not the fact that they're there to necessarily compete against each other, although I think eventually they will. It's the fact that Bitcoin is a better technology. It's a lot harder to send real hard gold all around the world in a matter of seconds. It's harder to store it. It costs more money. You never know how much is actually in the ground. Apparently, they just found more gold down in South America than almost the entire total market cap of gold. So we do know exactly how much hard Bitcoin there is, and there will only ever be 21 million, and we've already mined 19.77 million of it, and apparently 15 to 20% of that is lost forever on old hard or cold storage wallets and hard drives that people totally forgot about when they didn't think Bitcoin would be worth anything. So the supply is even thinner. So I thoroughly expect Bitcoin market cap to continue to climb as gold does. Gold is probably just leading the race right now, but eventually Bitcoin should catch up. That said, this higher high or these highs on gold are not necessarily a good indicator of the market environment, or better yet, market sentiment, which plays perfectly into the fact why gold is actually rallying so hard, considering he even warns of the dangers of relying on US dollars and urged people to seek new teachers to navigate the looming financial collapse. In other words, he's saying don't sell your assets or stocks or, crypto even to go and buy or hold dollars. Instead, sell your dollars to hold real hard assets, those being Bitcoin, silver, gold, things like that. Kiyosaki called the US dollar fake and explained that the currency became fake in 1971 when Richard Nixon took it off the gold standard, the dollar. Since 1971, the US dollar was propped up via US treasuries and bonds, and we've experienced consistently high rates of inflation. And so this high rate of inflation and the endless spending and printing of dollars from the central bank leads to more investors wanting to seek other hard assets such as Bitcoin or gold, as no central bank wants to stop price inflation. This is an article from Zero Hedge, and in it I found one sentence I really want to share with you. When a central bank like the Fed cuts rates and increases the money supply after an accumulated 20.4% inflation over 4 years, it is not defending price stability. It is defending price increases. This strategy serves to conceal the government's financial insolvency. In other words, they don't want people to go away from the dollar. They don't want people to be afraid. They don't want people to lose their trust in the current financial system, which is really backed by nothing other than the full faith of the US government. A currency with a declining value. Now, what's truly shocking is it's not just 20.4%. It's actually closer to 26.25% of inflation since January of 2020. In other words, we've lost 26% of our buying power over the last 4 years. Everything costs at least a quarter more than it used to. And so unless your income is increasing with that inflation to the same degree, it's highly likely you're actually becoming less and less of the middle class, and you're going to join the poor as the rich get richer. In other words, the only way to make it out of this thing is to truly buy hard assets or assets that are not completely tethered to the US dollar. Okay, so how does this even make sense then? He's basically stating go buy gold, silver, Bitcoin, XRP, any other assets outside of the US dollar for your stocks. But then he's also saying Bitcoin may drop to $5,000. So what should you do? And when will this happen? And arguably, will this happen to XRP as well? Well, when you look at the charts on things like gold versus the S&P 500 right here. We have February of 2020, and then we have a low of March of 2020 during the coronavirus pandemic and the crash that was subsequent. Now, when you look at the top chart, this is the price of the S&P 500. Well, in similar fashion, from that local high, even on gold, yes, gold rallied a little bit, but when the crash really bottomed out, as you can see, everything sold off. Gold, which people typically want to sell when a market's very bullish in a good market environment, right? Then they go and buy stocks. On the flip side, when stocks are usually performing very poorly, people want to buy gold. Well, right, in this situation, you can see at one point in time, both crashed. In other words, true panic and fear, everything crashes. So it doesn't mean that gold didn't start to perform well at one point in time. It's just that they were correlated. When there's mass panic and fear in markets, everything truly crashes. And in similar fashion, we have the great financial crisis in 2008. You can see down below, it says March 2008, right? As the S&P 500 indicated by this top line up here and the chart started to crash and continued trending downwards, so did gold. But you'll notice gold didn't trend down as hard, right? Its peak was at about $1,000. Its lows were at about $700, where the peak on the S&P 500 was $1,600, and it dropped more than 50%. So we did see a far larger crash in risk on asset classes like the S&P 500 versus gold. And by the way, when you look at Bitcoin, okay, Bitcoin trades no differently right now than risk on assets. So if gold is dumping maybe 20 to 25%, yes, it's likely Bitcoin could dump 50+%. Eventually that might change, but that's not the case right now. Now, if Bitcoin dumps, let's say 50%, it's extremely likely XRP dumps at least 50% or greater, as in almost every single time I've backtested and looked at the actual charts. People can have their opinions. The charts are the truth. The charts are king. Price is king, right? At the end of the day, XRP almost always dumps with Bitcoin in a very bearish environment. Now, I believe one of the major reasons that people are so bullish on gold and even Bitcoin is because, again, when you look at the dollar and how they're devaluing it, it's pretty impressive how fast the rate at which they're doing this. Well, the last time we looked at the US national debt, we were sitting about $35.4 trillion. And this was literally probably a couple of weeks ago in a video. Right now, we are sitting at $35.7 trillion. We're talking an extra $300 to $400 billion added in debt just in the US alone. And it's not just the US. As global liquidity in the euro, in the Japanese yen, in Canada, so on and so forth, is consistently climbing to new all-time highs as well. Virtually every central bank is printing dollars. Now, many people believe this is very bullish for crypto and Bitcoin. However, it's important to note that you don't want to be too risk on. At any moment in time, things can crash. So by the end of this video, I'm going to try to help you to figure out how to manage this. And again, this is not financial advice. You make your own decisions. Talk to a financial advisor. This is just my opinion, but I do believe we can kind of time this pretty well. But when Robert Kiyosaki talks about our debt consistently growing to GDP, you can see here back in 1929, we had about $17 billion of debt. Then right here, we had about 16% debt to GDP ratio, which meant our debt was only 16% of our total GDP. Since that point in time, when you go through the 40s, the 50s, the 70s, the 80s, 90s, and to present day, okay, we are sitting at over 122% of the total debt to GDP ratio. Not only is this unsustainable, they basically argue that at 90%, it's unsustainable. That happened in 2010, but we're currently sitting almost 22% above that. And that was in 2023. It's actually or arguably worse now in 2024. This is truly a sign of a collapsing currency, and people are going to look for other ways to store their wealth. One of those things being Bitcoin, and a rising tide raises all ships. As Bitcoin does well, so will the entire crypto market. So will XRP, and XRP will be primed to hit new all-time highs, especially with the current regulatory clarity it has around it not being a security. And so here is a video from a gentleman by the name of Jack Mallers, who's the Strike CEO, and what his prediction is based on the current market environment we're in, at least for Bitcoin.
What's the future, the near term and the longer term future that you envision for Bitcoin?
Oh my gosh. This thing's going to hundreds of thousands of dollars per coin, Charles. I mean, the US government is in so much debt. The way I think about Bitcoin's price equals technology plus fiat liquidity. So it's going to go up because it's innovative tech and it's better money. But what really shoots it up at a neck-breaking pace is when our government is tens of trillions of dollars in debt and has to roll that debt over. So they got a lot of money to print, and financial assets are going to soar. And Bitcoin goes up the most because it's the hardest to make more of. It's over, man. This thing's going to the moon.
You know, so interesting, too, because it's not just the U.S. I was just reading today, globally, these countries, these advanced nations, and all this fiat currency are going to have to spend $2 trillion on the interest alone, and they won't stop spending, Jack. They just won't stop spending money, and it's coming back to haunt them, and it's coming back to maybe people realizing fiat currency is not the place to be, huh?
Charles, this would be my message to America. Give me a second on this one. Guys, the U.S. government's got about $10 trillion over the next 2 years to roll over, refinance. That's debt. Our country's in debt. It's a huge problem. They got 3 options. 1, they could pay it back. It's not a real option because we don't got the money. We're broke. 2, our government could come out, Charles, and say, you know what, guys, we screwed up. After World War II, we changed the way money worked. We got off the gold standard. We issued debt all over the place. We got way too cocky. And actually, all of our banks don't have your money. They're insolvent. All the airlines you fly and travel on aren't actually good businesses that should be in business. Healthcare shouldn't actually be free. We screwed up. We piled on so much debt and screwed up the younger generation, and we're in huge trouble. So we're going to have to let everything fail and reset this country. Now, they're not going to do that, are they, Charles? They have a third option, which is unique to the government. They could print the money that they're missing. And when they print the money that they're missing, they're stealing from all the people that hold US dollars. And so what they'll do, they'll have to do is print dollars. And the only way to save yourself is own not dollars. And that's when you see things like the S&P 500 and gold and Bitcoin soar. And so that's what's going to happen over the next 2 years. They got to print 3 times more than they did during COVID.
I love your enthusiasm, Jack.
In other words, what Jack is actually saying is that adding global liquidity to the system is very good or positive for the price of Bitcoin and even gold, because not only will retail investors like me and you flood into these other systems or forms of money, but so will other central governments and banks as they want to continue to sell bonds in order to hold hard assets. And that's also one of the major reasons that gold is going up, as BRICS nations are starting to purchase gold in mass and dumping the US dollar. So then what is it? Will Bitcoin and XRP and crypto markets collapse and then we'll all get rich? Or should we hold on a little longer before there's a potential market collapse? What's actually going to happen? I'm not too sure. We're going to dive into a few more charts here just to kind of clean up our idea about what's to come. However, one thing we can all agree upon is the fact that the US dollar is done. It's no longer something that the majority of people or even countries are going to want to hold on to. Yes, they're going to print more money. Yes, things are likely going to go up, but eventually the party ends. So now what we're going to do is we're going to dive into the yield curve inversion. This is the 10-year bond over the 2-year government bond. Typically, whenever you get the 2-year government bond earns you more interest than the 10-year bond, that's what we have. That's what we call a yield curve inversion. And this is typically an indicator that people are starting to get pretty bearish in the bond market, which then leads to an inversion right below this green line. So whenever we are below the green line, okay, this is typically an indicator things aren't looking too healthy and hot. But then it's usually after the fact, after we normalize a rate, like right over here, that the market really peaks off and then starts to tank. So you can see this happened back in 2008 and even in 2020 during the dot-com bubble and the Great Recession. Okay, so whenever this blue line crosses below the green line, you can see right over here, and I'll try to get it pretty close and even. This is a yield curve inversion. Then we normalize, and that's usually when markets top or peak off. Sometimes it happens right away. Other times in scenarios, it happens a little bit later. But as you can see, we started getting a normalized rate right here on the blue line, and then markets started to crash. And as the market was crashing, again, this is the S&P 500 right here, then the normalization of rates continued to go back up. So this is a more normalized rate. Okay, then in similar fashion, look at this long yield curve inversion right here from January of 2005 all the way to 2007. So a couple of years. Then when we started to normalize in rates from June or May into October. So when you think about that, it's like 5-6 months of normalized rates. Market peaks off, then tanks. And as the market tanks, rates become more normalized. Well, in similar fashion, okay, we had right here 2020, a very short, very small yield curve inversion. Yes, it did invert for a period of multiple days. Then we started getting a normalization. Market crashed. Now, you could have some sort of a black swan event, but at the end of the day, it still proved to be a pretty accurate indicator. Now, this was one of the worst yield curve inversions in history since 1929. Okay, we're talking started in July of 2002. Now, you'll notice one thing here. We actually normalized for a little while, a period of 6 months, 8 months before, okay, the market crashed. Well, look at this. We just had a yield curve inversion for a period of a little over 2 years. Then we normalized, and we've only been normalized since August 26th of this year. Since that point in time, we really haven't had much time to continue to be normalized, but it could be a period of at least 6 months before. So the market, right, will normalize this yield curve a little bit more, and the market might climb a little bit more and then crash. And I'm not saying this is going to happen, but this is essentially what Robert Kiyosaki is predicting. So yes, we're going to get more global liquidity. Yes, we're going to get more inflation. Yes, we're probably going to get higher prices as the yield curve continues to climb up, and then the market continues to rally and everyone is all euphoric, and we had a soft landing and then the crash. And I think this is really what Robert Kiyosaki is predicting, but I think he's predicting it a little too soon. I still think we have a rally through the end of the year into the start of the next year, and by that moment in time, probably come March, April, I would look to get out. Now, if we see general market weakness right now, I wouldn't say you should stay in. However, we're still seeing strength in the general market amongst all cryptos, and so I would argue time to stay in and be relatively bullish with all of this government and money printing. And yes, that would include for your XRP bags, as we've been sitting in a range, and I don't even care to cover it right now. It's been like 2 weeks where we've sat at a range of about 52 to 54 cents. So that said, when we see a breakout or we see some new price action, I would love to share it with you in a video. But as things stand, I am still relatively bullish until things start to change. That said, if you haven't already, go to bullrunners.com. If you want to become a crypto millionaire, this is a great way for you to join our early bird list for exclusive altcoin picks, market analysis, and access to our crypto education inner circle. This is going to be a platform for you to really learn and take advantage of everything that we know, and actually even specialized calls that we're only going to share inside of this list. The sooner you do it, the better, because we can only service so many people, especially if we're doing customer support or private conversations. So we're going to limit our very tight-knit inner circle to a certain amount of people, and so it's definitely going to be first come, first serve, people that take that incentive, that initiative. But then after that, I'm sure we're going to offer some other things. So either way, the sooner the better. Go to bullrunners.com. Link is down in the bio or the description below, or you can go to the very first pinned comment. Make sure it's a comment directly from the Bull Runners channel and not anyone else. It will be pinned. But thanks so much for watching the video. I hope you learned something today, and I look forward to talking to you in the next video. Goodbye.